Thanks, Sam, and good afternoon, everyone. Again, my name's Amanda, and I'm just going to share my knowledge that I've gained and a bit of my personal experience. I want total transparency here on my end and talk to you all today about learning how to build credit by using a credit card and the differences of credit cards, like your store credit card versus a secured credit card. I'm going to talk about consolidating debts, balance transfers, lines of credits, like your personal line of credit or a home equity line of credit. And then I'm just going to share my knowledge and personal experience on the buy now, pay later. And like Sam had said earlier, we're going to do things a little different this time around with the seminar. So it's going to be interactive, and I am hoping that you are all going to be transparent with me and share your answers in total honesty. And so we have our first question to get us started. Which camp are you in? Are you in the camp where you haven't started building credit yet? Or do you already have some credit and we need to work on it and rebuild it? And it looks like all of us today right now have credit and are rebuilding. And I will admit that I am in the same camp as you. I want to bring up this one thing, and I tell it to everyone, I think, when I have this conversation when it comes to credit or working on our financials. Annualcreditreport.com. It's a free website where we can grab our credit history from all three bureaus. And it's not our credit score. I don't want anyone to think you can go and see that number. Am I in the 700s yet? You're only going to hear or read about your credit history. And that's to make sure that we truly have no credit history or to see what we really need to work on to rebuild our credit. Now, pre-COVID, you were only allowed to check this website once a year for free. But now during COVID and as of July 2022, I checked myself, we can go on here and go weekly instead of that once a year. So weekly for free, you can go and check this, and you're able to save those results as a PDF, or if you want to print them, you can do that as well. And what makes up our credit? And I put these are in order from the most important. So payment history, that is the most important. It has the highest impact on your credit score. 100% on-time payment history is a good sign for lenders that you can reliably make your payments, because even one late payment, that's going to hurt your credit score. So stay mindful of our due dates. If you get that single 30 or 60-day mark on your credit score, that's easier to recover from, but it can still hurt your score significantly. Then you have, some have gotten a mark that they've, hit 90 days where they've missed payments, and that's more damaging, and it could absolutely disqualify you from a certain loan. And after 90 days, missed payments can become charge-offs and actually be sent to a collection agency. And they calculate this. There's actually a formula that's followed, and it includes all the possible payments you can make across all your reported accounts. So for example, if you had 120 possible payments in your credit history, but you had 3 late payments in that time, the calculation, like the formula, you would take 120 minus those 3 late payments divided by 120, and the percentage is going to be 97%. But you really want to have your payment history, because it's the highest impact on your credit score. You want that to be 100% on time. I make my payments all the time. The second one, credit card usage. That's another high impact on your credit score. And there's this rule of thumb to keep your balances on your credit cards below 30% of your credit limit. Credit card use matters most for each individual card. So the average use across all your cards, that's important too. So really just try to stay under 30%. Of course, less is even better. Being under 10% of your credit limit, that's even better. And obviously being at 0%, not using the credit card at all, that's the best. And you don't need to carry any credit card debt to build your credit. So you don't have to get into more debt. You don't have to use that credit card and rack up your credit balance close to your credit limit. You don't have to do that just to get, a monthly report to the credit bureaus. It's not necessary. And this gets calculated. So the creditors will usually share your info with the credit bureaus on the same day each month, but it's not the same day that you pay your bill. So that means you could have paid your bill, paid that credit card balance down to a 0, but a different number, a different balance was actually reported on your credit report. And the third one here, derogatory marks, that is another high impact on your credit score. Derogatory marks, it's good to avoid because they can stay on your report for 7 to 10 years, even if you have already taken care of what that report said. If you have a collection, like since debt collectors, they need to have proof that their info is accurate. Why I brought up the annualcreditreport.com, you want to make sure that all the information that was reported is correct. And you should dispute a collection if anything is off. And you can see if it's worth negotiating your debt. I've seen a couple cases where if it's an old debt, people have actually just waited for it to fall off their credit report instead of paying back. And if you have a public record, like a bankruptcy, or you've had a civil judgment against you, or a tax lien, those are harder to remove from the credit report. And again, if any info is wrong, you can document it with your own documentations on proof that you come up with. And if you feel it necessary, people have taken it to court and they have records and they will help you build your case. You can also, on annualcreditreport.com, make these disputes to the individual credit bureaus right then and there, and it could remove the public record. But I do want to be transparent. It is always the best option to repay your debt, whether it's open and active or it's a closed debt that's been charged off, because the reporting on your credit report can be changed to the word paid. And nothing makes your credit look better than that 4-letter word paid, because that's going to tell, future creditors, you may have had a blemish on your credit, you may have went through something at this time, but you did the right thing and it was fair and you repaid them. You repaid what was lent to you. And they might be more willing to lend you more than someone who does not repay. And this fourth one here, your credit age. This has, I would say, a medium impact on your credit score. Lenders typically like to see that you have experience using credit responsibly, so you can improve your age of credit history over time by keeping your accounts open and in good standing. If you're paring down your accounts, closing down some accounts or closing credit cards, I would recommend not to close your oldest credit card, because that's what gives you your long credit history. Sometimes credit cards will close an old account that never gets used, like the credit card company may close your account because you're not using it at all. So use an old card now and then to prevent a potential score drop on your credit. I at least make sure that I use mine once a year. And when you have an older account, I just want to put this out there too, an older account like your mortgage or a student loan, when that comes off your report, your score could drop since you're losing the credit history that comes with that account. And the fifth one here, total accounts. This has a low impact on your credit score. Lenders would like to see that you've used a variety of accounts responsibly. So having different account types, like I have a credit card and I have a loan, that can help your credit. And you don't need to worry about the exact number or the mix, because you're going to build that over time. And the important thing is to use your accounts responsibly. And this last one here, hard inquiries. This has a low impact on your credit score. Hard inquiries, your credit applications, that can stay on your report for up to 2 years. But the effect of the hard inquiry can fade over time. So that's good news. It's a temporary hit, and your scores usually will bounce back in 3 months. And you can absolutely plan ahead and minimize your hard inquiries at least 9 to 12 months before trying to get a mortgage or a big loan. And for those who are just starting to build their credit, an easy place to start is with a secured credit card. Now, credit cards are offered, my opinion, some are like from the bottom of the barrel, they come in the snail mail, and these are some of the highest interest rates, fees, and it's just not a great starter because remember, your first credit card choice should be a forever one so that your credit age will grow and you won't want to close that one. So please do your research. Don't just accept your first pre-screened offer that comes in the mail or comes from the mouth of a person behind a register when you're purchasing something in the store, or even over the phone, or if it's advertisement you see on TV, a commercial. Just give yourself options. Don't just go for the first thing that you see, and read the fine prints. A secured credit card, that's going to require a deposit, and that deposit serves as collateral for the card company. So the deposit will often equal the credit limit of that card. So if someone wants to get a secured credit card and they want to start with just $200, they're going to give a credit card company $200 in that deposit, and the credit card company will give them a credit card that has a limit of $200. And you can use a secured card at the same retailers where you would use a traditional unsecured credit card. You can use it online, you can use it in stores, at gas stations, going out to eat. And after several months, I would say 3 to 6 months of on-time payments, some providers, some lenders, they will graduate you to a traditional unsecured credit card. And then with an unsecured credit card, there are the lenders that can also increase your credit limit, which gives your credit score another boost. And so those are two things to keep in mind when you're using a secured credit card. First one, very important, and I'm going to say it a lot, your on-time payments, because it makes the biggest portion of your credit score. You know, always aim to always pay by the due date. And the second thing, keep that credit utilization below 30%. And just be careful too. It's very easy to stack up a high balance because secured cards, they have low limits. Another way to build credit, some aren't comfortable with getting a credit card. If you have someone trusted in your circle, you can become an authorized user on someone else's credit account. It's a fast way to add information to your credit history. And as an authorized user, you really piggyback on someone else's credit. However, if the person who authorized you on their account uses credit irresponsibly, you might want to remove yourself as an authorized user, as any poor credit habits, that's going to affect your record too. So do your research, make sure you're becoming an authorized user on an account that can actually help your credit. And every creditor does not report authorized users' information to the credit bureaus as well. And then another this is easy because I mean, it's just too easy to be offered and accepted the credit cards from department stores or even a gas card. And if that's a route that you're going to take, please be careful because some of these cards, they can also come with the high interest, and it's a great strategy to charge only small items and pay your card balance off in full each month. And I had thought of another option, and I have seen it. These credit builder loans. They are loans that you take out only for the purpose of building your credit. So instead of you filling out an application, asking for a loan, when you usually get approved, you get the money for the loan that you've requested, that balance. Instead, with a credit builder loan, you're not going to receive that lump sum payment from your lender. You're going to make payments to the lender up to the agreed loan limit. After you've made all the payments, you'll then get back the money you paid, of course, minus a small fee. And this helps boost your credit score by creating a history of those on-time payments. And just a quick question here. How long do you think it takes to build credit? If you guys are listening to me, is it going to take 2 months, 6 months? Is it going to take a year to build your credit? "12 months" is what half of us have said, and there's a 25% of us that had split between 2 months and 6 months. And the correct answer is minimum 6 months. All right, and some ways to build credit. My personal opinion, one of the best ways to build your credit is to ensure and stay on top of making all your payments on time. Pay your credit card bills on time, pay your loans on time. An easy way to do that so you don't have to pay attention to something like that is signing up for those automatic payments. You can set up an automatic minimum payment to credit cards, or you can set one up automatically to pay the full statement balance. And then you have the option as well. You can choose a fixed dollar amount to put towards your credit cards every month. You'll just need to make sure that you have enough money in your bank account that's going to cover those payments. And automatic payments, like I said, they can be set up for loans, in your bills, your cable bill, that can get set up automatically as well. And setting up auto pay, why I think that's so important, it's just we reap that benefit. We're going to have that positive credit payment history without having to manually schedule payments each month. It takes a little bit off of us, and yet we're getting the bonus out of that. Another idea, you can open a second credit card, because when you have multiple credit cards under your name, that's going to increase the amount of credit available to you. And if you avoid running up high balances on your credit cards, you're actually lowering your credit utilization ratio and improving your credit score when you have another credit card. Plus, you're having more than one credit card, it gives you an opportunity. This is the little added bonus here where you get to earn different credit card rewards. So you might want a travel credit card, or you might want one that gives you cash back, or a card that rewards in groceries. I've seen credit cards that reward when you go dining out. Then there's the personal loans. You can take out a personal loan after you've been using credit cards for a while and making your on-time payments. You should have enough credit history to qualify for a small personal loan. This isn't your quick fix. Personal loans usually take 6 to 12 months to raise your credit score. However, on the other side of this can diversify the types of credit on your credit report. And you can use your loan to prove you can consistently make payments on time. And if you don't have a credit card of your own yet, or you just want to build credit without credit cards, you might be able to leverage the power of our other monthly bills. If you're a renter, you can ask your landlord or the management company if they report your payments to Experian Rent Bureau. If they don't, you can actually sign up for a rent payment service that works in partnership with Rent Bureau, and it'll have your rental payment history reported. And you can also consider signing up for Experian Boost. This helps boost your credit score by tracking your phone and utility payments. If you pay these bills on time every month, you can see an instant improvement in your FICO score. But I'm going to stress this one right here. If you accidentally miss a payment, you need to contact your lender and, as best you can, make up that payment before that payment is 30 days late. And you're not going to want to apply for too many new credit cards at once or try to get a new loan, because there's going to be back-to-back credit inquiries. And when I had talked about the hard inquiries earlier, they lower your credit score, and lenders can actually turn you down just because you've applied for too many things within a short period amount of time. Generally, 2 hard inquiries every 2 years will keep you in the absolute clear from rejection just based on your inquiries. You can keep your old credit accounts open and try to use them at least once a year. It's worked for me, and it prevents lenders from closing your accounts due to just inactivity. And I'm gonna share a little story with you guys. I started with a secured credit card myself, and I'm throwing up my air quotes here, my gas card, I called it. I had it hammered down to myself, and I did not forget that this was going to be my gas card. This secured credit card I have, I use it for nothing but gas because it's the first one I have. But I'm going to tell you, I don't want you to make the same mistake as me and not read the fine print. I will regret this forever, but I refuse to close this card because it was my first one. In a year of using that card, I found out I have a yearly fee of $30 on this credit card. And my interest rate, I'm going to be total transparent here, my interest rate on this credit card is 20.99%. And no, that's not a good interest rate. I gave the credit card issuer $300 and I got the secured credit card with a credit limit of $300. I was told the best practice with a credit card is to never use more than 30% of your credit limit. And 30% of my credit limit then, it was only $90. That's my spending limit. That's the only thing I can use. And I was really lucky enough, I had a woman sitting on the other side of the desk. I got to go in person. This was over 10 years ago. And she actually told me, I got my first credit card and I only used it to buy gas. And she's like, it really worked for me since I'm already using that to spend money on gas. And she told me, if it's possible, I need to pay off that full balance on the card every month. And if I couldn't do that, if it's possible and I'm only paying that minimum payment, I'm going to try to pay it sooner than the due date because that could save me on interest and it could be reported on my credit with a lower balance. And there are so many options out there and it can be overwhelming. We can also consolidate our debts and that gives us a fresh start. I only recommend, again, setting up auto pay and not reverting back to racking up debts. This fresh start, it's to help us get rid of debt, not double it. When you consolidate debts, you can get a personal loan, you can have a line of credit or a credit card in the amount that equals your debts. I do want to say you may want to consider if you want to consolidate debts and you want to put it on a credit card, you need to ask for a higher balance than that debt balance so that you're not having this high balance. I've already used up 100% of the credit card limit getting reported on your credit score every month. And with consolidating a debt, those debt or a single debt, it's instantly paid off. And you can build your credit by repaying on this new loan, this consolidating loan, and you pay it on time. And every month, your credit history, it's gaining better credit reportings every month. And with balance transfers, this could actually save you money because if you think about it, the only smart way to do this is to transfer your balance to something that has a much lower interest rate. That's going to save you money on your interest. Again, here's your fresh start. Your old credit card debt gets paid off and you have a chance to repay on time and focus on paying just one credit card versus 3 credit cards. And you can remember just one due date versus, okay, this one's getting paid on the 12th and this one gets paid on the 1st. But it's so important not to use any of the old credit cards that were paid off by this balance transfer. And there's other alternatives, personal lines of credit, overdraft line of credit, and home equities. I don't recommend using the overdraft line of credit because using an overdraft line of credit, that means you didn't have money in your account that's linked to this. And it could easily become a bad habit to rely on this overdraft because it's going to be linked to your checking account. A home equity line that might offer a higher credit limit than a personal line of credit could because your home is securing it. And a personal line of credit, it's similar to a credit card. So you can draw from the available balance only the amount you need, and you pay interest on that amount. All right, and another poll here. I'm curious, have you ever been asked to open a store credit card at checkout? And we all have, it's horrible. I have too. I've experienced that, you can get 20% off your total today if you sign up for this credit card and you've been pre-approved for this store credit card, or actually just being asked in general if I wanted to sign up at the store credit card. It's happened to me at Kohl's or at JCPenney or a New York and Company, and I fell for it. And that's not how you want to start building your credit. These rates are always astronomical. I made the mistake. New York and Company, they got me. I fell for it. I agreed, and they closed their stores. They are not anywhere near me where I can go in person, take a 20-minute drive and go to the store. I can't do that no more. I also did it again with Wayfair, and this one was online. Looking on Wayfair, the advertisement pops up. I'm like, oh, that would be nice. Okay. Wayfair actually ended their co-branded relationship with Comenity. So they closed my credit card. So I just want to put that out there. It's some food for thought. These are things that can happen to others as well. And understanding the limitation of store credit cards. Some of them might only allow you to use your credit card only at their store or only on their website. Not all store credit cards do that. I do have one with Ulta, and I can use this anywhere as a just Visa or MasterCard credit card. I can use it at gas stations. I can use it at grocery stores. I don't just have to use it at Ulta or only buy their products. And I still reap a benefit of getting points for Ulta, which I use to get free items from them. They've also increased my limit because of my low balances and payment history. So it is absolutely possible that you may find one that does that for you as well. But I will bring up again that small personal story I shared with you guys. Another limitation to consider, that store might close down. You might not have a store to go shop to anymore. If they close down, you won't really use that credit card, and you need to at least use it once a year. Or in the case with me with Wayfair, they might close your credit card account. It wasn't because I wasn't paying, they ended their relationship with their credit card company, and that can happen as well. And I wanted to just briefly discuss the buy now, pay later. And that's things like Klarna, Affirm, Afterpay's one, PayPal has one I've heard, and there's QuadPay, FuturePay, etc. There's plenty. There are some pros to this buy now, pay later. They have short loans. Some of them are interest-free, and they are paid off in equal installments. If the rates go up, our payments do not change if we're repaying a short loan to, say, Affirm. And your payments can be made weekly, every 2 weeks, monthly, and it's convenient. It's very, very easy to use. And there are no fees if you make your payments on time, because some loans with these buy now, pay later can actually be 0% interest free. There's no gimmicks. You can link your payments to your debit card or your bank account, you can set up that automatic payment that I mentioned. And in some instances, they may allow a credit card. So maybe, once a season, you get one new thing and you link it to this credit card. So that credit card's being used and you repay it off. And buy now, pay later it's available everywhere. It's not just online. Stores are now adapting to this and they're allowing their customers to make payments using buy now, pay later. And I'm going to share just quickly before I get through the cons here. My personal story, my first Affirm purchase, my interest rate was 29.5. I paid this one off sooner than I needed to so I can save on the interest. But my pro now, when I use Affirm, I pay 0% interest on my purchases. So my total payments truly equal my purchase balance. And I make my payments on time 100% of the time. So this has really worked out for me in my favor. And then I'll get into the cons. It can be tempting to splurge or make an impulse purchase because I don't have to pay full price right now. I'm just going to buy it now and pay for it later. However, missing a payment, or if you don't have sufficient funds in your account, you're going to trigger fees, penalties. They may take away that 0% interest rate on your purchases, and you might have to pay interest for the rest of your payment period. You also can get in contact with these buy now, pay later companies so easily. You're not going to be able to pick up the phone and talk to Amanda and ask me questions. They don't have humans like that available to you. And you can have a negative impact on your credit score because on-time payments aren't reported to the credit bureaus. But if you miss a payment, that's going to get reported. So it could be difficult to receive a refund as well. Say you buy something and your product doesn't even show up, or there's something wrong with it, it's defective. Since you have to work with both the retailer that you bought it from and the buy now, pay later service, that's difficult, and that part gets inconvenient. And like I shared with my story, the first time I used Affirm, my interest rate was 29.5. That is high. That is not a good one. So interest rates are high, and they could be higher than credit card interest rates. And I want you to, ask yourself questions regarding buy now, pay later. Do you need this, or do you just want it? We don't have to get it if it's just a want. You can put that on the back burner for later. When you look at your payment that you're going to be making to the buy now, pay later, is that payment going to fit in your budget? Do you have that money available in your paychecks or in whatever accounts you might use, especially if the payment is weekly or if it's every 2 weeks? And are you okay? Are you willing to set up automatic payments so you won't miss a payment? And if so, if that's what you're going to do, you still need to make sure that that money is available on those due dates for your payments. If not, you have to add it to your budget and you remember to pay for it manually. And that is all I have, and I am ready for questions.